Put your crypto thinking caps on. Welcome to our weekly coaching call. Uh, if you've never attended or are watching this recording, we always like to have this meeting. It's kind of like a meeting rhythm that allows us to make sure we are in tune with the market, both from a macroeconomic standpoint and a microeconomic standpoint. I do a lot of screen sharing. I do a lot of conversation, and I talk about just really, I start really high up is the goal, and the anatomy of this call is to go high altitude first and then start to draw in our attention on a more microscopic, opportunistic scale as we continue to move into this call. So if you're wondering why we do it the way we do, that's kind of the anatomy. Start big, zoom in small, and then when and if we have time, we'll have Q&A, troubleshooting, and of course, in the chat, you're always welcome to drop your questions in the chat here in the Zoom call. If you're watching the recording, you're welcome to just ask questions in Discord, and we'll knock those out. I would recommend asking those questions in the general chat channel. That way you have more possible eyeballs of people who attended the meeting and might actually have context in addition to myself. So that's kind of the protocol. And as always, we put the recordings in the office hour recordings channel, which is right below the yield farming channel at current time. Okay. As you can see, on the screen, at least I hope you can see on the screen, we have our crypto bubbles chart pulled up. And if you're, I guess, hiding under a rock, you know that we touched the Bitcoin all-time high, or at least we established a new one for about 52 seconds, and then we had our long overdue correction. But if, as you can see on this chart or on this graphic, in the last 24 hours, the meme coins and the AI coins are making they're kind of the lead sled dogs. And the meme coins, dog with hat, Pepe, Bonk, of course, Floki, Shiba Inu, Dogecoin, the list goes on, have been kind of the risk on assets that the market has chosen to be involved with as Bitcoin does its dance. Of course, all of these are altcoins that we see on this. If we look at the week, things are even more green. If we look at the month, things are all green. These are just your top 100 performers in the last 30 days. And again, if you scan over this, you see a lot of meme coins. You see a lot of artificial intelligence coins. You see a lot of layer one and gaming, large cap gaming coins, okay, or tokens. And so those are the narratives that we've been paying attention to here for the better part of a year. And this is a huge opportunity to kind of be retrospective and look back and go, oh, wow, we were right. You know, we have been correct. I have members messaging me saying, thank you so much for this community. You know, I'm up X amount of dollars. This is incredible. It's actually beyond my expectations. And it's because we are having these weekly meetings. We are paying attention to what the market's telling us, and we're seeing things before the general public sees them. So one of the huge benefits of being in a community like Get Paid Daily is that you're beating retail to the starting line. And in many cases, we actually beat institutions to the starting line, which is really fun. It's the reason why a lot of people in our group are making a lot of money. And so now we're still in this. We haven't actually seen the big dance yet. This is still just kind of the appetizer movements that we're enjoying. And this is just a fun way to graphically represent that. Another representation of a bull market is when you see the meme coins and when you see institutions like CoinMarketCap awarding meme coin of the year to Bonk. I'm curious in the chat, did any one of you own Bonk? I did not get on the Bonk train last year. It's always hindsight 2020, right? I did not get on the Bonk train, but if you did, It would be awesome to know if you guys have made money on that meme coin. I'm not a huge meme coin guy. I've got a couple just to get in the game and to be in the game, but it's not really part of my go forward strategy. But I'm also not going to be the guy that acts self righteous and uh, snotty and says, I'm never going to touch a meme coin, because I do actually, and here and there. And I think the utility of meme coins is overlooked. Meme coins, now some of them are absolutely ridiculous and not worth the time, your time, but some of them that have the ability to create the network effect overnight, like a bonk, like a whiff, and many others, they create a community, and the utility of a meme coin is their community, the whatever you want to call it, the virtual camaraderie, the humor, whatever it is that binds those investors together. That's the utility. So Randy has some bonk. Michael never expected it, but Shiba Inu has gone incredible. So a lot of people bought Shiba in the top of 2021, but if you bought Shiba in the last, I don't know, year, you're probably up well over 400%, if not more, because I think Shiba did 400% like in the last week, if I'm not mistaken. So, all right. I'm gonna just kind of, as usual, rotate through some headlines that I've found super interesting on X, and then we're gonna dive into the charts, and then I'm gonna kind of land the plane today, looking at a few micro cap or small cap AI, or not AI, some AI tokens, also gaming altcoins that I find to be in a really super interesting place right now. And if you're looking for ideas on where to deploy capital, maybe these could be some great things for you. And we'll also look at one of my favorite liquidity pools right now. Okay. U.S. private job data was released today. The non-farm employment change was at 140,000 versus 150,000. It's a little under expectations. And Mortensen Bach here, who we follow frequently, he gives some commentary. The ADP data came in slightly below expectations, leading to a fall in rates and the dollar. Consequently, the initial stock market movement is up. The private labor market is still robust. And this sentence right here is the reason why I believe that the Federal Reserve is in a rock and a hard place, because the employment market is strong. It actually, that 140K figure that came out in the release this morning is higher than last month's revised figure. And so we're now trending upward on jobs in the private sector, okay? Not government jobs, not farm jobs, but private jobs. And that's just a sign of strength. Like, I've been saying this for months, and it's not because I have some level of enlightenment that no one else has, but the economy is strong. It's strong until it's not. And you're going to hear a lot of different propaganda, both from corporate media, liberal media, conservative media, all of the above, trying to spin it. But when you look at the bones of what we're involved in economically, I'm not saying we have it all together, and by no means do we have a perfect economy, but for the time being, we have a strong economy, and that can change very quickly. And I do think we will trend towards time in our near future. When I say near future, that could be 4 months, it could be 18 months. Those are, in my opinion, short periods of time where things could get really bad really quick economically, but we're not there right now. And so the market knows that. So the market is going to continue to pump. You're going to see the Russell 3000 probably make new all-time highs now that the S&P 500 and the NASDAQ and the Dow keep doing it over and over again. And to that end, Jurian Timmer is an analyst over at Fidelity. If you are familiar, Fidelity is obviously one of the largest hedge funds in the world. They have the second largest Bitcoin ETF that's been gobbling up this Bitcoin supply. We'll talk more about that in a second. But he says something interesting. If you notice that the market seems less obsessed lately by how quickly and by how much the Fed will pivot to lower rates. Me too. It shows that the narrative has evolved from rates to earnings. Now, I'm not going to read this entire um, thread. I'm actually just going to drop it in our general chat for you to find on your own time. But basically, he's saying exactly what I've experienced as someone who pays attention to this stuff, which is all of 2022 and 2023, we were literally just hanging on every word and projecting, and we still are, don't get me wrong, like we're still paying attention to Jerome Powell and the Federal Reserve, but we want them to stay paused. We want them to not cut rates. We want them to not raise rates. But I'll say this, I'd rather them raise rates a quarter of a basis point than start cutting right now. Because when they start cutting, it means that the musical chair dance is coming to an end. And we only have a little bit more time left in the party. When you start to see rates cutting, that's when you know that they know that there's economic systemic weakness. It's all in the data. Go look at at history. It sounds like when we start cutting rates is when we make money, but actually the backside of the money printing cycle is when we make the most amount of money. Anyway, I don't want to get wrapped up in that too much, but this is good commentary. So we're not actually obsessed right now with rates. We'll become obsessed when the week of the rate cut announcements or the rate decision announcements happen. Like it'll be the centerpiece, but we're not sprinting ahead 2 or 3 months trying to figure out rate cuts now or rate pauses or rate raises. It's all about market earnings. And if you've been paying attention, all of these companies that have been announcing Q4 earnings in the last 3 weeks have been just knocking it out of the park. And that shows economic strength. History repeats. Just like 2020, Bitcoin saw an all-time high break and then a 15% dip. Open interest forced to dump. This is the people with leverage. So everybody was leveraging long, not everybody, but a lot of people were leveraging long with using leverage. I'm talking about day traders. Okay. I'm talking about traders, not investors like us. Traders were using leverage. And if you are a trader and you use leverage, you're going to get hurt. And it's just a matter of when, not if. And if you are using leverage, when an asset is trending into resistance, that is an all-time high, like that is the most fundamental elementary line on the chart of a potential glass ceiling. If you're using leverage there, you're going to get liquidated. So that's what happened yesterday. We just liquidated a bunch of open interest that dumped us down to 62K. Funding reset to neutral, 900 million late longs liquidated. Bottom is most likely in, unless we go for one last dip to 58,000. Learn from history, and the dips were for buying as well as we analyzed yesterday. So I agree with what he says here. I don't know who he is, and I don't know his track record, but I feel like this is a great little illustration of y'all. We had a great buying opportunity yesterday. At the same time, in the same day, we had the fun moment of celebrating all-time highs. So buy the dip in a bull market. Buy the dip. I'm going to show you a painful example of how we should have bought the dip yesterday on a particular token. BlackRock bought 12,447 Bitcoin yesterday. Just BlackRock. Okay, there are 11 other hedge funds. That's 14 times the daily new supply. What's the daily new supply? 900. What does that mean? It means the entire world of Bitcoin miners, that is the validator nodes, the computers in people's garages and the big warehouses and the server farms and the things that you see both from a corporate and a private mining network that participate in Bitcoin programmatically, algorithmically, every day produce or unveil. It's not that they create it out of thin air. It's not a money printer. There's 21 million Bitcoin in history forever. Is that enough zeros? There's only 21 million. Okay. 19 million have been mined. Now, at the current daily rate, we are unveiling 900 new Bitcoin per or through the miners. And then in April, I think the Bitcoin halving has moved a couple of times. It's now it's now slated for April 21st. So that 900, I think I've got my numbers right. Let's see. Yeah, it's something like 900 a day will be cut down to 450 a day. Meanwhile, you have guys like this that are buying 12,447 and they're literally running out of supply on the over the counter desks. Exchanges are running out, like it's supply shock, and I think and I shared this yesterday in Discord, but typically what we see after an all-time high hit is that Bitcoin doubles within 14 weeks of the Bitcoin halving. So if history repeats itself, we'd be at like $140,000 Bitcoin by June. Four phases of the Bitcoin halving. There's the pre-halving rally. There's the final pre-halving retrace, which I think we had yesterday. Then we have the wait. It's weird how it went unbold. We have the post-halving reaccumulation, and then we have the post-halving parabolic uptrend. And he kind of charts it out here. It's a very busy graphic, but we are this right here, this blue line is supposed to signify the Bitcoin halving. We are in the pre-halving / possibly the pre-halving retrace, like I said. And then after we have a accumulation phase, which would be the red box. And then we have the parabolic phase, which is the light green box. And over here, you can see the parabolic phase. I mean, Bitcoin has done in the last two cycles, Bitcoin has done things after the halving that are just absolutely like, even for veterans, they're like, I didn't see that coming. I didn't know that was possible. So for all those asking why Bitcoin and other memes / altcoins are skyrocketing higher, the Federal Reserve is currently doing a de facto quantitative easing by letting the excess money they printed in 2020 and 2021 that was sitting dormant in the reverse repo program account to buy Secretary Yellen's bonds. I was mentioning this the other day in our chat, I think with Rick in our general chat over the weekend, maybe. You heard that right. This is with inflation currently inflecting higher. The Fed is throwing proverbial gasoline on the inflation fire by letting the reckless excesses it printed in 20 and 21 flow into private hands. Why? No idea. We're just here calling balls and strikes. But it's nothing short of reckless and crazy. Oh, and the reverse repo program fell again today by $1 billion. This was 2 days ago. Translation, the pace of inflation is about to take off again, which many will say was unexpected. And then lastly, when it's the easiest thing to predict, in our view, in the I don't understand what he was saying right there, but for context, this means since Thursday of last week, the reverse repo program is down $130 billion, or stated differently, that's 13 years of federal balance sheet expansion in 3 days. So y'all a lot of times a lot of you a few of you members are like, hey, you know, what's reverse repo? How is the government printing money if rates are higher? This is how. They have backdoor ways, y'all. They have all kinds of ways to funnel money. And um if you understand this kind of info, this is so like think about what he just said. Last week, we saw $130 billion flow into the private banking system, basically. And guess what we had this week? A Bitcoin all-time high. It's because credit markets are opening up because they've got a spigot. BlackRock sets new record with 788 million of inflows into their Bitcoin ETF yesterday. We kind of covered that already. Palm AI, I mentioned this last week. If you're looking for a small cap token, this is kind of the one I was talking about. Even John Doss mentioned earlier in our chat, what I would consider a front runner of this is PAL AI. Palm AI, I mentioned actually a couple of weeks ago. I told a few of you that I was buying it and you could buy it. Yesterday, if you look at the 24 hours, it had dipped all the way down. Let me show you the 7-day. We had dipped all the way down to 49 cents. It's back up to, so you would have doubled your money if you'd have just bought the dip yesterday on Palm. This is that retrospective, I wish I would have moment. Palm is cool because it's a AI chatbot utility. I won't get into the full utility of it. It appears to have 100% circulating supply, or almost. Its fully diluted market cap, which is really what you got to worry about, is 80 million. So anything like 50 to 100 million is kind of in that sweet spot of a potential, 20 to 100x opportunity if it really catches some wind. And it seems as though the lifespan of this token only stretching back into earlier this year, I believe. Let's see, or December. Yeah. So it goes back to December. It's a young protocol, and you can tell it's catching steam. So if you're looking for some AI exposure with high risk and high returns, that might be one to look at. They did touch $100 million market cap, but on Coin Market Cap, it's saying 80 million. So very volatile. You're going to go up and down. But just remember not to pay attention to just price, because Palm AI is at $1.02. If you go to PAL AI, which again, I think is a predecessor of it, it's got a $500 million market cap with a $629 million diluted market cap, fully diluted market cap. It's got a pretty good circulating supply already intact. But its price is obviously 63 cents. So again, don't go off of the price of things, go off of a market cap of things, because that market cap will show you the actual ceiling opportunities there. Okay, I'm going to keep moving for time's sake. Rect Capital, Bitcoin is still firmly in its pre-halving rally phase, but as is the case with pre-halving rallies, dips can happen. Bitcoin briefly dipped 14% yesterday. The best we can hope for are these dips, but be careful what you wish for. Dips do happen. Same chart I showed you earlier. We haven't seen anything yet in terms of alts. It's a matter of time, not if. So I think this is a good time to introduce the Ethereum chart I wanted to show y'all. So Ethereum is the granddaddy altcoin. It is the first to market. It is the most widely adopted, and it's a maddening token. It makes us all crazy with how slow and expensive it is, but it is what it is. So I wanted to show y'all one thing, and this is kind of what this profile is saying. If you use TradingView or Deck Screener, just remember, I'm on the weekly chart. This is every red or green candle represents a week in time. Okay, so I'm looking at the entire lifespan, 9-year lifespan of Ethereum right now. I want to show you a couple of things that, again, this is why we do the weekly calls. The Fibonacci retracement tool, the Fib retracement tool over here on the left, okay? It's not omniscient. It's not perfect. Nothing is. Nobody knows what's going to happen with prices. I have an increasing number of people asking me, hey, where do you think price is going to be for XYZ? I don't know. All we can do is educated guesses. So with the Fib retracement is a tool that can show us great hypothetical possibilities. And what we're really dealing with when we invest over short-term time horizons is probability. Probability is the thing that we've got to pay attention to. So let's look at last cycle. So what you do with the Fib retracement tool, for those of you who want to, kind of learn how to use TradingView a little bit and kind of chart your own course, this is just a really basic way to use it. And I also want to use it in with relevance, because it matters where Ethereum is right now. The last cycle top, Ethereum hit, right about here at 1420. So you go to the recent market top. In a minute, what I'm going to do is I'm going to start here at this top, and I'm going to go down to this bottom. But I'm going back a cycle. So I want to go to the market top, and I want to go to the market low. And I'm just going to place that right there. And what I want to show you, and again, for time purposes, I don't have time to explain all this, but the neutral line here in what we call the golden ratio is the 0.618, which was about $918 last cycle on October 2020. When Ethereum, I'm going to drag this out a little bit further. And if you'll notice, I went from top to bottom. And if you really want to be conservative, if you ever see like a wick like this one, although this one's not really a wick, I draw them conservatively. So I don't go to the top of the wicks on the top side. I go to the top of the actual candle. And then on the bottom side, I'll go to the bottom of the wick if there is one like this one. But this one right here is the actual local bottom of that cycle. So then if I look at the 0.618, whenever you cross the 0.618, the next probable target is the 1.618, which is right here. Any time in the past that Ethereum has broken through the 0.618, it has gone parabolic to the 1.618, which was $2,162. And then after the 1.618, you look for the 2.618, which it did. And then after the 2.618, you look for the 3.618. So if you're one of those people, and you probably are at this point, going, how high can my token go? Like, what are the possible, like, I always think about the movie, the original Gene Wilder, Willy Wonka in the Chocolate Factory, and the glass elevator, and like how far, which direction, like what could it do? This is the Willy Wonka Chocolate Factory elevator, okay? The 0.618 is really kind of like base camp 1. I'm looking for base camp 1. And then if I start thinking about my profit taking strategy, I really just kind of want to look at 1.618 is the next obvious bus stop. And then if it gets to 1.618, then you're like, okay, 2.618, 3.618. And then if it goes just nutso 4.618, I rarely see the 4.618s pan out. In parabolic euphoria, 3.618 is very possible. 2.618 is very routine. 1.618 is almost a given. Okay, that being said, we've that was the last cycle. What about this cycle? And you can do this with any token. I'm going to grab the Ethereum tool again. I'm going to go to the last cycle top, not the wick, but the top of the candles. Just going to nestle it in right there. And in this example, I do have a red wick right there that I'm going to go to the bottom of. And can anybody tell me in the chat for educational purposes, what has Ethereum done that's similar to the last cycle based on what I just told you? Quick, anybody in the chat, tell me what happened. What has it done? That's right. It crossed the 618. So if I can adjust this to where you can read it, what is the next obvious target for Ethereum? The granddaddy, the 1618. So if I find the 1618 here, that gives me a price of $7,038. So if I'm a big Ethereum holder and investor at this point, I'm like, okay, well, from here, if I invest in Ethereum right now and I throw 10 grand on it or whatever, or I just take my current bags at their current value, if all it did was go to the 1618, which is a routine bus stop after you cross the 618, then I would less than double my money. And that's just kind of a way to project. Again, it doesn't have to go to 618. Black swan events, earthquakes, asteroids, whatever can happen between now and then. I'm trying to be very sober with this. This is a tool for educated guessing. But it's been really, really helpful for me. And honestly, that's about as technically analytical as you need to get. And I say that there's obviously I mean, gosh, there are people in an entire industry. Look at all this stuff. I don't use any of this. It's kind of like Pareto's principle, the 80-20 rule. 20% of your tools are going to give you 80% of your decision-making power, bottom line. And that's been my experience. So we're going to come back to the charts in a second. I want to make sure I'm not leaving something behind. I thought this was notable. MicroStrategy is leveraging or borrowing 600 to 700 million to buy Bitcoin now. Like, let that sink in. That is conviction. This is a Fortune 500 company. I think it's an S&P 500 company. I can't remember. I think they are actually. They're definitely a NASDAQ company. They're not an S&P. I don't remember. Anyway, talk about leverage. Talk about a flywheel. They're borrowing against, I think they're selling stock or borrowing against stock to go buy Bitcoin. And I just find that to be incredible. Couple of other charts to look at. Bitcoin dominance. As always, Bitcoin dominance is the dominance of the Bitcoin market cap in relation to all other tokens and coins on the market. Currently sitting at 54%. It's been ranging between 52 and 54 for a few weeks, actually a few months. And this is all prescribed, I guess, for bull markets. You're going to see the Bitcoin dominance. I don't know. I don't think it will continue to like go up into the 60s and 70s ever again. I think it continues to drop because of altcoin adoption and the growth of the total market cap. But it's notable. And when you start to see, this is what I find interesting. Like that's a weekly. Let me look at the 4-hour. So on the 4-hour chart, it's still not taking a big dip. It's not doing anything crazy. The relative strength index down here is starting to dip, which is probably the reason why we see Ethereum breaking out above 3,800 or above that 618. So Bitcoin dominance is something you want to keep an eye on. Another thing that you want to keep an eye on is this guy, the old DXY. We've been following this guy for years, ever since the rate cuts or rate increases were put into effect. This is our arch nemesis. This is our Bitcoin arch rival, the US dollar index. The strength of the dollar in relation to 5 other major world currencies, including the euro, the pound, the yuan, the Swiss franc, and something else. It's going down. We want it to go to 100 and below. I think when we are in our euphoric phase, we should be more like down here, I think. Where was the dollar? I haven't looked at this actually. Where was the dollar when we were having 2021 all-time highs? Let me fit this to screen. So 2021 February, okay, that was COVID printing. Yep, there it is, 93. So low 90s of the US dollar is where we were last time crypto was doing just life-changing work. So we want to continue to see the DXY drop. When will the alt season fully take off? Great question. I think we got to see the dollar drop, and I think we've got to see the Bitcoin dominance drop down several percentage points. But hey, look, as long as Bitcoin is pumping, that's a good thing. That just means that the hot air balloon is rising higher, the tide is rising higher, and when altcoin season hits, it's going to be absolutely explosive. But we could be starting it right now. I mean, the fact that Ethereum is where it's at is notable. What was the name of the indicator you were showing? Maybe the fib retracement tool, Stephen, from the previous screens, fib retracement. I lost my train of thought. Forgive me. Total market cap of the crypto market. It's just, you're going to see up and only up right now with all the different totals. So remember, on these charts, the total one market cap is everything: Bitcoin, Ethereum, and every token on the tradable market. The total 2 is everything except Bitcoin. The total 3 is everything except Bitcoin and Ethereum. And the others is everything except the top 10 tokens on the market, including Bitcoin, Ethereum, and the top 8 after them. USDT dominance, another massive factor that we cannot lose track of. To me, when I was talking about the reverse repo side of things, of quantitative easing earlier with the Federal Reserve, that and the USDT liquidity injections are equal. They're like stimulus coming from different sides of the mountain. And this is a huge reason why you're seeing a lot of tokens up and to the right, especially Bitcoin, but more so, this is what fuels alt seasons. So when Curtis was asking when will alt season fully take off, like, the seeds are planted. The question is, like, my orange circle here is not drawn to scale with these other two. So technically, like, are we in it now? Like, it's hard to say, because the dominance of USDT keeps dropping. And something I haven't done, again, another little tool I like to use is the little ruler, and you can just measure. So like if I go from the let's see, this was September. Yeah, this was about right. This is when we did our 100x challenge. if I go from here to here, the USDT dominance, that is, when the dominance is going down, basically it means they're putting more of the largest stable coin on the planet in the market. That's what that means. When you see it going down, when the largest stable coin on the planet goes into the market, that means that people are getting stable coin, moving into stable coin, getting ready to buy altcoins, getting ready to transition into crypto. And so that is a 52% dip. Then let's see, this right here is a 49% dip. And this right here is a 60% dip. So we're kind of like right in the middle of the previous two alt season dips. So on the USDT dominance. So I think it's just a matter of time, like but like this is on the weekly chart. So you got to remember every one of these candles is 7 days. So it's really hard, Curtis. It's really, really hard because time is so relative. Like in our human hearts, we want, Chainlink to go to $95 tomorrow. And while it's sitting at 19 or 20, what is it at right now? Yeah, 19.4. And see, for me, like this is just literally the healthiest chart. It's the biggest no-brainer in crypto, as indicated in prior calls for months and months and months. Okay, I don't have time to do a ton of charts right now. I'm going to quickly retreat to the chat, see if there's anything I can help with. What tool do you use to see when ETH dominance is going down and alts should rise? I've never even tried that. ETH.D. Yeah, ETH.D. But I don't know if that's the same correlation. It's really Bitcoin. You don't want to use the ETH, I don't think, but I could be wrong. Something to look at. I don't have time to really unpack it. Have you seen any movement in the Coinbase app ranking? Absolutely, I have. I watch it every day. And if I'm not mistaken, the update from today earlier was the app rank is now at number 69. So it has gone almost parabolic in the Coinbase app ranking in the last week. So good question. Starting off topic, so speak to this as you see fit. Can you speak to long-term strategy as it relates to accumulation and holding certain coins? For example, Bitcoin. More specifically, should I consider holding on to some Bitcoin indefinitely? If so, should I continue to accumulate, specifically with the halving coming? It seems that altcoins may come and go, but not the case with Bitcoin. Yep. I mean, Bitcoin, I've always said, is more of like a philosophical religious decision, where it's never going away. But if here's what I would say. If you're buying Bitcoin right now, you need to be buying it with the commitment to dollar cost average into it every week forever. Because, for example, if you started dollar cost averaging at the top of the last market, the last cycle, and you dollar cost averaged every week until now, you would be something like 20 to 40% in the black. So even if you started in the highs, sounds antithetical, you would still be in the black. So you have to be willing to play the long game if you're buying Bitcoin at any rate right now. That being said, yeah, you want to own Bitcoin long term. Absolutely. My view is make money in altcoins so that you can buy more Bitcoin for your bunker money. Please remind me, where do I go to figure out the best stable coin and network to use for swapping into a token I want to acquire? It just depends on what network the token you want to acquire is on, Cindy. That's it. I think I understand. Like, for example, on CoinMarketCap, if I'm looking at PAL here, it just has an Ethereum contract on this. Doesn't mean it's not on another network, but in this case, I know that I can buy USDC on Coinbase, and I can send that USDC or Ethereum. A lot of times the stable coins aren't necessarily the best token to buy first. You might want to buy Ethereum because the the native token of the chain is what's going to have the greatest amount of liquidity in relation to that token you're wanting to buy. So like if it's on the Polygon chain or the Avalanche chain, a lot of times they are paired or trading pairs in liquidity pools with the native token. Yes, they do have stablecoin pairs, obviously, but the stable coins might actually not get you the best exchange rate. So you want to do a little trial and error at minimum when you go to swap it, like on Uniswap or Trader Joe or any other DEX. You just want to make sure that you test it. Like, what happens if I take $100 of USDC and try to buy a PAL? And then what happens if I take $100 of Ethereum and try to buy a PAL? Which one gives me the most PAL? And that's kind of what I do. So hope that's helpful. Couple of other notes. I really like this chart. I really like this token. Playable games. I've been talking about it for weeks. It's been consolidating. It's not necessarily that it's been underperforming. It's been really kind of ranging while a lot of other big movers happen. And I think it just has a lot to do with its market cap being 46.8 million. It's just a really small token, but it's in the video game narrative. I think it put its bottom in back in February. So from here, if it goes back to 0618, you've got what's my current price? So if it goes back to 0618, it's a 53%. It's a 53% gain if it just comes back to the neutral golden ratio line. And then if it goes to the 1618, like if it breaks through this 1 cent marker, closes a day above it, it starts to go into price discovery and we start to get some really silly numbers happening. I mean, this is the kind of token that I could see going to the 3618 real easily, potential 500% from here. So I'm accumulating this at this level. I haven't found any like catalysts that would be holding it back. The tokenomics aren't the best in the world, but I'm not worried about tokenomics in the short term. This would be a token I would sell this year probably. So, buy some Avalanche on Coinbase or whatever your central exchange is if you want to buy this token. And you can swap for it easily over at, I think, Trader Joe. If you want to buy it. Yeah, Trader Joe. Trader Joe is the DEX, and you just need to be on the Avalanche network and trade Avalanche for playable games. And when you look on Dex Screener, if you're using Dex Screener and you find a token like W3UL, it's a really ridiculous token ticker, but usually over here on the side, it'll connect you to the best possible DEX that you want to buy it on, and you just open it in a new window, and just like I just did, and then connect your wallet. That's just a little hack that comes with experience. Another one I'm just looking into is Creo Engine. It's a video game, kind of like an infrastructure play that provides computation strength to all these games. It's kind of an ecosystem play. So I'm not invested here, but I'm thinking about it seriously. And another one very similar to it is WASDR. I think these are kind of like pre-Nakamoto game options. Playable, WASDR, and Creo Engine. So take that with, whatever conviction you want to develop there. but I think WASDER has like a $12 million market cap. Yeah. I haven't looked into the tokenomics yet. It's got about a 59% circulating supply. It hasn't kind of really, I don't think it's gone off to the races yet. So it came around last March, which is about when playable games launched. Obviously, this is when we were buying our 100x challenge last fall, but I don't think we ain't seen nothing yet, in my opinion. So, all right. Any final questions in the chat before we rock and roll and dismiss? I hope this was helpful. Was this helpful? Let me know in the chat. I threw a lot at you today, but I'm hopeful that you were able to walk away with something. Josh, have you looked at Solidus AI Tech yet? It's top viewed token on CoinMarketCap. No, I haven't, John. I might need to do that. Good. Helpful. Okay, awesome. Good stuff. We have a lot, y'all. We have a long ways to go. That doesn't necessarily mean a lot of time necessarily. It just means we've got a lot of upside in this market. So, hey, new member Molly, welcome. Good to see you. Michael, welcome. Cindy, OG, always here. Good to have you. Heim, very helpful. You mentioned that you'll talk about the. Thanks for reminding me. So I actually mentioned this to him. This Ethereum Prime is a game token. Has been in range for me a whole lot, even during the volatility seasons, and is earning anywhere between $10 and $20 a day on an original $1,500 capital investment 2 Fridays ago. It's doing really well. It's a great example of how when you're calculating your liquidity pools, the calculator is helpful. It's a ballpark estimate, but it's not going to show you the truth always. It can't. It's dealing with retroactive data rather than forward leaning data or proactive data. So just always don't be like, if you find something that you kind of like, you're digging, this is on the base chain. So this is like super cheap fees. You just need to, like, if you're using Coinbase, for example, or if you have tokens, you'll just want to have the Ethereum token on base. And again, as an explainer, tokens can exist on multiple networks. Okay. But like Ethereum can exist on multiple networks. But Ethereum on Ethereum blockchain is the network is what creates the high gas fees. So if you want to play in the sandboxes that do not have the high gas fees that eat into your liquidity or your fee income, especially on your LPs, then deal with the base networks, the Polygon networks. I know Nakamoto Games and Matic have been an awesome pool for many people. Chainlink on the Polygon network and USDC, that pair has been awesome. The Ethereum and Prime here on the Base network. Base actually has a lot of options for those of you who've gone through the Module 7B training and you use DeFi Llama appropriately to sort through the different things. It takes a little like you need to look into it, research it. It's a skill to acquire. Like you need to learn how to sort the data, but like that's how you find the goodies. And if you just exclude Ethereum, you can go find a lot of great LPs. So balance your LP usage and your altcoins right now. Those are your two biggest opportunities to generate upside in this market. So y'all have an awesome day. I'm out of time. I've got to leave here in 4 minutes to head to an appointment. So hope you guys have an awesome rest of the week. I will provide this recording and in the office hours channel and more updates to come. Thank y'all. See you soon.